Hello everyone, this is Simon coming to you today with some interesting topic. We're going to be talking about the 4 quadrant of cash flow, and that teaching has been around for over 25 years by Robert Kiyosaki. He wrote about a book. It's called Rich Dad Poor Dad, and out of that book I enjoy this part of it, which is the 4 quadrant of cash flow. What we're going to talk about today is about how you earn your income matters. How you make your money matters. Because on the situation like taxes or an investment or the future, what are you thinking of, and what is it, those 4 quadrants, the 4 cash flow quadrants, the way you make your money, what it means. Today I'm just going to explain to you what it means and what's the difference in between all those 4 cash flow quadrants. These are the 4 cash flow quadrants. One is, of course, an employee, and the second one is self-employed, and the third one is business owner, and the fourth one is an investor. Robert Kiyosaki explains it well in detail on his book Rich Dad and Poor Dad, but that's something hopefully one day you read that book. You can even find the audio book and listen to the whole book while you exercising or jogging or walking. If you are a super busy person, you can take advantage of the audio books these days. So let's start with the first one, an employee. What is an employee? An employee is someone who has a job, someone who trades the time, their energy, and also their skills for money. An employee stops working if the employee decides he doesn't want to go to the job. One day his income or her income will stop, because you are exchanging your time, and if you're not there to give them your time, you're not going to get the money. An employee usually pays taxes first, then gets the balance left on his hand. That's how it's been structured. Anyone making $100, to kind of give you an example, if you make $100, first the federal government, the local government, the state will take a portion of your check. Then you pay in towards your Social Security and also your Medicare. Then you get the balance after all that deduction. So let's say you made 100 and all those taxes and everything taken out. If it was $20, then your check will be only for $80. Then after that, it will start your living expense and your savings, whatever had to be done after that part. Let's move on to a second quadrant. That's self-employed. The name says what it means. Pretty much self-employed. Self-employed is a person who's savvy or business-minded, who sells products or services, either or, and started his own generating income method. Self-employed is someone who creates a business and runs it day-to-day operation on its own. Sometimes self-employed businesses can be just one person, or it can be a few additional to that person. Self-employed earns money while he's working. If he stops selling the product or servicing and not spending the time, self-employed person income will stop same time. Similar to an employee. If an employee doesn't go to a job, doesn't get no money, and the self-employed person, if he doesn't go to his store selling the product, or if he doesn't go out and service or sell his services, he's not going to get paid. A self-employed is a little bit better when it comes to taxes, because self-employed person will make the money, then it will deduct all the expenses, so the amount of federal taxes and state and local taxes he pays is at the end. So an example for that is, let's say a self-employed person gets $100. First, he will take off all the expenses he accumulated, or whatever expenses it cost them to run that business. Then after that, he will deduct some of the additional expenses like his car mileage or cell phone bill or whatever. It helps him to get the business done. Then the bottom line, he will pay the taxes. Usually he will pay the taxes at the end of the year when he files his tax return. So that's one of a little bit of advantage on the self-employment versus an employee. And also the self-employment kind of controls his own schedule. If he got the business and if there's a demand, he can do 15 hours a day. And if there's nothing going on that day, he can take a day off. But at the same time, if he doesn't work, he doesn't get paid. So that's what a self-employed person is. Then let's move to a third one. The third one is a business owner. A business owner is a person who started the business but grew it to the point that he created a system and also hired a talented team or employees to run that business day to day. A business owner usually starts as a self-employed most of the time. And once he proves the concepts, once he gets an investment, usually he can scale it up to a business. Then he becomes a business owner. Of being a business owner versus a self-employed. Like I said earlier, a self-employed, if he doesn't go to work, he don't get no money. But a business owner, once he builds the system, he doesn't have to even show up at the job site, because his team, the team he built and the employees he nurtured and have to run that business can run that business for him, and the payoff will be at that end. Then the fourth quadrant we're going to talk about is an investor. An investor is someone who owns an asset that produces income. An investor will generate income by investing their own money. To be an investor, you don't have to be a self-employed or a business owner. You can be an employee all your life and make a good amount of income if you invested your income properly and you save a portion of your income every year. With time, you can be an investor. This is the ultimate goal of everyone's in this world. To get enough money invested so you generate enough cash flow every year or every quarter, whichever way you get paid from your investment. Or it can be a property you invested on and you get rent check every month. That's the ultimate goal. Or you can invest it on the stocks. It pays you dividend. whether it's monthly or quarterly or yearly or every 6 months. Or you can invest it on a company and a startup, make money, save money, and start putting a goal or a dream or a plan how you can be an investor. So off of your investment, you can make your living. Then when you retire, you don't have to worry about getting a second job. So don't make a mistake when you're young. Keep on focusing on how you can build financial free life, so that way you can benefit from it the rest of your life, so you can enjoy life with the family and friends and loved ones, and you don't have to focus on making every dollar to make a living. So the ultimate goal of everyone should be make it now, save it now, invest it now, so you can enjoy it later. Alright, with that, I hope you learned something from it. Thank you very much. This is Simon. Thank you. Make sure you give me a thumbs up and subscribe, and I'll see you on the other side on the next video.